What's your straight read on what we're seeing, and does it make you revise your expectations for overall consumer activity this quarter?
Yeah, thanks for having me on. Look, the way that I would size this up, we saw a very strong holiday. By our Chase credit card data, consumer spending was up 8%. That's the best in a decade. January held that stability, which you saw this morning. And actually, I think what's more important, we're seeing a further acceleration so far in February. And I think what's driving that is underlying brick and mortar as Omicron continues to pass. And so what we're actually focused on is now the forward look. Look, you have pretty tough comparisons coming up as we look at some of the stimulus a year ago in March. But I think on the other side of that, our view is the underlying consumer picture, which is wedded to employment and wages, which are obviously both in positive territory, I think steals the show. Now, inflation is the other dynamic that we are watching. I'm sure you have questions on that. But the underlying health of the consumer through so far the front half of February, we think remains robust.
Well, then, if the overall top line, as you suggest, looks like it's going to continue to be strong, it would seem like there would have to be some kind of opportunities within brick and mortar, because the stocks have really underperformed. I mean, I know that the old playbook is if the Fed's going to tighten, rates are going up, you're having these margin pressures, they might suffer as we lose some of that stimulus tailwind. But where would you look in terms of beneficiaries?
So 3 things we're looking at. Expanded TAM, number 1, so total addressable market. I think your casualization players, your athletic, so your Nike, your Under Armour, your Lululemon come out of this stronger than what they were before. We're looking at margin structural advantages coming out. That's tied to direct-to-consumer, e-commerce. So that would be the handbags and accessories. That's Capri, Tapestry. And then we're looking at overall better models coming out of this. And I would put a Levi's in that category. I would put a Bath & Body Works in that category. I would put structurally higher margins coming out of some of the specialty players, which would be an American Eagle. Another name that we're watching is Macy's. So now, look, we are mindful that I think 2022 relative to last year, I think it's much more stock selection focused versus 22. You had some of these underlying tailwinds for the consumer. So the inflation playbook is also one that we're brushing off. That points to the models, in my opinion, that are less value oriented. Big Lots, The Gap, Ollie's, I think could actually see some market share deterioration on the other side of this.